Is there about to be a housing market crash due to a wave of evictions? I was watching another YouTuber's video and he was talking about an increase in lease defaults and evictions that are going to lead to a surge in investors dumping homes at fire sale prices. And I was intrigued. Since we have one of the top channels discussing the eviction moratorium, we've been helping tenants and landlords since the beginning, and we're real estate agents. This was news to us. And here's my response to that video. Hey there, Christian Walsh, real estate agent with Wire Associates. We've been helping tenants and landlords and buyers and sellers navigate these crazy days in California and beyond. And we don't mean to disparage another YouTuber, but we disagree dramatically with their interpretation of the data. And in fact, we're going to use the same sources and data and show you that we don't believe there's going to be a housing market crash due to a wave of evictions. So the quick premise on this video is that the CDC Eviction Moratorium and rental assistance have caused a decrease in the number of rentals that are available. At the same time, this has led to an increase in prices of 15% year over year. And tenants aren't paying, and there's going to be a wave of evictions. Once these evictions happen, these investors are going to dump these properties at absolute rock bottom prices and crash the real estate market. That's a big premise. We're going to dive in and answer some important questions that really this video brings up. Are renters not paying rent right now at a high rate? Why are rents so high? Did the CDC eviction moratorium have anything to do with lack of inventory and driving up prices? Will there be a wave of evictions that can crash the housing market? And the bigger question, can a wave of evictions crash the housing market? Using the same National Multifamily Housing Council data, let's take a look to see if renters have stopped paying rent in historic numbers that could crash a real estate market. And here is the data that was used for the chart from this video to show that rents were unpaid at a rate of 8% at the end of 2021. That sounds like a lot, but when we look at these numbers, and I've got the link below so you can download it, you can see that rents aren't paid often. You're not going to get 100% collection of rent. And you can see pre-pandemic that it was in the 95, 96. Oh, and by the way, which sounds worse? 8% not paying rent, or 92% are actually paying their rent? I think it sounds much worse when you use the other percentage, but at the end of the day, those are the same numbers. 92 does seem low, but it's not crazy low. It's off about 4%. So there's about 4% extra non-payment of rent. This is not a catastrophic amount. And how do I know that? What furthermore adds to this? And here it is at the National Multifamily Housing Council website about the very data we were just looking at. I've highlighted here. They have discontinued the rent payment tracker as of January 2022. So that December number was the last number we're going to see from the National Multifamily Housing Council. Why is that? Is this a grand conspiracy? No. The consistency of the data shows that the industry is stable and there's no longer a need to monitor the monthly rental payments. So this is the link that I will share below. The National Multifamily Housing Council doesn't think this is a big deal and is no longer going to be tracking these numbers. So that to me is a good sign that this is not some cataclysmic event, that 8% is some crazy number when they're not going to be tracking it anymore. And as for why the rents are so high, this is the answer here. And this chart was not in that video, but it came from one of the sources that was used by that YouTuber from RealPage. This shows US occupancy. And what's interesting about this chart is you can see that increase as rents are going up. And what occupancy talks about, what the occupancy number is how many properties are occupied. When we have higher levels of numbers of properties occupied, there's less inventory. So that means that prices go up. It is a supply issue. And this shows low supply. So this is why rents went up. And this is the helpful data you need to look at from the very same source. Was it the CDC eviction moratorium that led to an increase in the occupancy rate? Let's go ahead and look at that. So September 4th, 2020 is when the CDC Eviction Moratorium went into place, and we can see that occupancy was up, but it also is seasonally up at that time of year. And then it ended in August 26th of 2021, and occupancy was up, but again, not at a crazy record high level. Seasonally it is. What we see is that occupancy actually went through the roof after the CDC eviction moratorium ended. So the moratorium is over. Theoretically, landlords can move forward with evictions, and many did and many have. What we would have expected if the CDC eviction moratorium was actually the cause of higher levels of occupancy, that we'd see that increase during the period that that eviction moratorium ran. And that's not what we're seeing in the data. So it does not look like the CDC eviction moratorium had anything to do with the increase in occupancy, which ultimately led to a reduction in inventory and an increase in price. So the increase in rental rates is not related to the CDC eviction moratorium. So the next question is, well, what could it be related to? How about the fact that at the same time, we have seen prices on homes continue to go up 20% year over year. So many renters were forced to remain renters, or Gen Z, who was ready to move out on their own and buy a home, couldn't because values had gone up so much. So we have a larger pool of renters competing for the same number of rentals. So this is what we're seeing in the numbers. It isn't related to the CDC eviction moratorium. We have more renters competing for a fewer number of properties for lease. It's a supply and demand issue. Will there be a wave of evictions that can crash the housing market? Well, this YouTuber makes a bold prediction, at least we think it's bold, of 4 million evictions in the next 12 months. So we turn to Eviction Labs, the same resource he used, to get a feel for how this stacks up. And this is what we found when we went to Eviction Lab. Right on their homepage, I have a link below. In a typical year, landlords file 3.7 million eviction cases. That's a typical flow. Now, we've been low on that, but in a typical year, and we have to catch up maybe on some evictions because of the eviction moratoria, but 4 million is not going to cause a huge wave when we're already close to that in a normal year. As you can see, 4 million doesn't seem like it's going to make a big enough difference, considering that's typically in a typical year when we don't have eviction moratorium in place, how many evictions there are. The sheer volume of evictions, if we do exceed these numbers, if we get into 4 million or more, that will become a de facto eviction moratorium of its own. The courts can only handle so many unlawful detainer cases. There are limits to how many cases that a court can handle. Here locally, I have a landlord client whose attorney had to wait 2 months to hear from the court to serve the unlawful detainer action via posting and mailing. What normally would take 2 weeks took over 2 months because of how backed up the courts are. If we do start to get more evictions coming in, the process is going to drag out, and we won't expect the courts to be able to handle a big wave and expedite the process. So there is an upper limit to the number of evictions that could theoretically happen in any given year. Now, bear in mind that there are still some areas that do have an eviction moratorium in place. We've covered these. Los Angeles County and City is a prime example. What we feel is going to happen in these areas is it's actually going to lead to an increase in foreclosures on rental properties, and not huge numbers, but definitely a tick up in those. And we've covered this in our SoCal foreclosure report, and we'll keep continuing to cover this because many of those landlords can no longer afford to make payments. But once this property is foreclosed on, whether it goes back to the Benny or an investor buys it, with an eviction moratorium in place, that tenant will not have to move. As for a wave of evictions leading to a reduction in rents, this is essentially stating that availability would go up, there'd be vacant properties, and landlords would have to reduce their rents in order to entice renters. So this would lead to an oversupply. And this may happen very locally in some markets, but it's unlikely across the nation. At the national level, this will be the case. And how do we know this? We can look back at another time when we saw a lot of folks forced out of their homes, the global financial crisis. Between short sales, foreclosures, and evictions back then, we had an unprecedented number of folks forced out of their homes. Now, during this time period, we've calculated and released content on this, that even with this extreme number of relocations, rents only dropped about 10%. When people are evicted, they don't necessarily disappear and leave a big empty gaping hole of availability. They, in some cases, will move in with friends or family temporarily and then move to another rental, or in some cases, they will move to another rental during the eviction process. I've seen it happen before. Landlords aren't necessarily strict in the verification process, and they'll let them move in. So the fact that we have 4 million evictions or more doesn't mean that we lose 4 million households being occupied. At the end of the day, the CDC Eviction Moratorium and the rental assistance program, they did change things in the market, but it doesn't look like they had any effect on the increase in rental rates. It's due to other factors like more demand. As supply comes to the market, we may see that rents will stabilize, and at some point in time, affordability gets crunched, obviously, as well, and renters won't be able to afford the exorbitant rates. So while evictions may go up, it is unlikely that this will actually lead to a softening in rental rates, and certainly not a softening in house prices. So don't be looking for a housing market crash in 2022 or 2023 related to evictions. Do you think the market's going to crash due to the wave of evictions? Let us know in the comments below. We want to hear from you. Make sure you subscribe to our free weekly email newsletter. Comes out on Sundays. We have a link below so you can do that. Join over 2,000 others in getting the latest market updates, and we'll keep more coming on evictions and eviction moratoria. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we want to hear from you.